Great. Once again, welcome everyone for today's CPD session. The topic for today's session is trust and general reconciliation demystified. So we are going to see how, we could get into bits and pieces of understanding the process of reconciling your books and what would be the best way to adapt to stay compliant with Law Society at the same time, also manage your practice, keep things efficient. So we're going to see a whole bunch of things in today's webinar. So as we progress into the session, I'm sure you will all feel really comfortable and understand things to the T, and you will be able to come up with more questions. And we can set aside at least 15 minutes for question and answer right after the 3 p.m. So that way, I'm sure you'll all have a lot of questions and we could keep all the questions saved to the end. So keep entering all your questions in the chat window. I will go back to it towards the end of the webinar. And as I mentioned, we are running a Hattrick CPD webinar this month. And there are 3 nice topics. I'm sure you'd got an email with all the details. So one of the topics that we're doing today is trust and general reconciliation demystified. We also have a Law Society bookkeeping compliance and disbursements demystified. These are the 3 topics that I personally chose, and I felt it'll be really great being year-end, annual report filing coming up soon. And, we feel this is going to be really helpful for all of you. Keeping that in mind, let's get started off with today's agenda. Just give me one moment while I'll pull up my screen and have more folks joining in. I can see a lot of them joining in. So nice to see you all today. My name is Gayatri. I'm called as G3 in uLaw. Many of you would know me. And I'm happy to present this webinar to all of you and make sure that you are going to be able to do your trust and general reconciliation in, a reasonable time. I am not guaranteeing you 10 minutes, nor I'm saying it would take 3 hours. So a reasonable time is going to depend on, person to person. It's case by case. Some people have 1 bank account, some people have 2, some people have 3. So some people have only general bank accounts. Some people have a trust and general. Some people have a trust, a general, and a credit card. And you know what? Some people being into real estate practice, they would have 2 trust accounts and then general and then credit card. And then they will have multiple accounts to reconcile. So that is why we say, should it take 10 minutes or 3 hours? It totally depends on, the volume of transactions, the number of bank accounts. So these are some questions that are handled case by case. So don't jump into any conclusions thinking that, okay, so if I attend this webinar, I would be able to do the reconciliation in 10 minutes. No, that's not the key. The key point here is that we are trying to break down the process, understanding what is a reconciliation process. It is not a single click button. Okay, yes, it is actually a single click button, sorry. But it is not just that. What goes behind it for you to be able to get that single click button, right? Now, if you're uLaw user, you know that once you have added all the transactions that perfectly matches with your bank statements, and then you have the reconciliation button popping up, right? So that you just have to literally click on that button and you have the report in hand. But to get to that point, what are things that's needed to be done? That is what we're going to take a look at in today's webinar. And to break down the agenda, we're going to understand what is a reconciliation process for both trust and general. General includes credit card as well. And what does it really take to be audit ready? Now, you can be audited anytime in the year. It could be today, tomorrow, spot audit, practice audit, and you have several types of audit that will need you to be instantly ready at any given time of the year. Now, what does it take for you to be prepared for that audit? We're going to walk through that particular checklist and we're also going to see what are the core aspects of financial management in this entire process. Now, I know it's going to be a little bit of, accounting, finances, bit overwhelming, especially for a Friday afternoon, but so sorry we couldn't avoid this. Is I kept it to the last of the year, so I don't before the holiday season. So we could be more focused on getting our accounts straight. Better late than never, right? Like you still have time. So let's get to it. Accounting. Now, sorry, there are different platforms people use today for keeping track of their books. Some people use simple spreadsheet. Some people use a general accounting system, QuickBooks. Some people use a specific legal practice management system like uLaw. And it totally, I don't think anybody still uses a paper pen method. If you are, somebody who writes, I really appreciate that, but I don't think that's any more efficient for you to be able to keep up with your practice, especially to be compliant with Law Society, draw all the compliances, including reconciliation. So I am focusing on the first three. In fact, the last one, which is about using a legal accounting software, which is designed to keep your trust accounting compliant with Law Society, help you with automated calculations, help you with all the posting that happens at the back end, which is into the respective journals, ledgers, subledgers, blah blah blah. There are so many reports that goes in the hidden fee book, HST reports, PST reports, taxes, financial statements. Now, if you are someone who uses an accounting system, especially a legal accounting software, you don't have to worry about all this. Now, what is it that you have to worry about? Very simple, keeping in mind your transactions to be entered on a daily basis. One thing that I always tell my clients that, dedicate that 15 minutes a day to go through your bank statements online today. Everything is online. Everything is virtual. Have your bank account synced to uLaw or your respective software that you're using. See how much you can make out of that, by importing all the transactions, especially your expenses and withdrawals. Now, your receipts or income are to be streamlined as well because they go into trust or general respectively, and you want to make sure that you are adding them on a regular basis as and when you get it. So you get it as an email transfer, or you get it as a bank deposit, or like a check, cash, whatever is the method of payment. Record it on the same day, so there's no way you're going to miss out on recording these receipts or income. So one thing, while that is done, and using a smarter way of adding expenses like a bank connect or importing the transactions using a spreadsheet into your software, if it supports really like uLaw, all of this really smoothens the relationship between the software, you, and compliances all together. So, of course, keeping everything efficient is what we're talking about today. And the goal is to, of course, achieve reconciliation end of the day. And if you are able to add in the transactions on a daily basis, I know it sounds really hard to get into the system, but it's not that difficult if you could spare that 5 or 10 or 15 minutes, depending upon the volume of transactions you have. It's not going to take you more than a couple minutes for a single transaction, so you can multiply and work accordingly. But in the meantime, understanding all the data entry, receipts, payments, withdrawals, expenses, all of this to be categorized into the respective ledgers, postings. Once that is done, you have you know that you have the accounting platform that is going to take care of the rest of the things, like building these ledgers, journals, statements of accounts, other things. So mostly you'll see all the law firms will have one general account, one trust account, one business credit card. Now, coming to the point of how do you categorize which expense or income goes into which type of account and stuff like that. If you notice that, when I mentioned mostly have one trust account, one general, and one credit card. Now, even though I see a lot of them having trust account, but they don't use trust account that much because they know that, that there's quite a lot of things that you will have to submit to law society or go through as a process. When you get a retainer, you need to make sure you've given the retainer agreement, you've given them a retainer receipt upon collecting the payment. You need to ensure the payment has gone into the trust account appropriately without a cent difference. Of course, more than anything, let's say if you're refunding them from the trust, let's say for a reason, and the bank charges you a email transfer money of $1.50 or something, shouldn't be taken out of your trust account. If it's being taken out of your trust account, it needs to be replaced so you don't land up with a bank error. Now, these are some small things that you really have to pay attention to if you have a trust account and if you're regularly using it. It is better to use a trust account too, because it's not that bad. At end of the day, you have an additional step to maintain accounts, but it is what it is. If it is trust or general, both needs maintenance of accounts. So at least if you're doing it in trust, you have the retainer in place, so you're not going to lose your money. You're still going to be able to make the payment from trust to the general, make it yours, and all of those by raising an invoice. The next thing you will do is, once you get the payment into the general, making sure the payment goes into the general account, then you pay yourself. If you're making from the disbursements, anything from the trust or general, recording them appropriately. Now, how do you do that? I, again, always tell my clients, like when I was a bookkeeper, I have a very, little experience there, but just my experience from what I've told my clients is that always follow your bank. Now, if you have your bank statement in hand, you can follow the transaction. You know that for a reason, your debit or credit has to go somewhere into your books, respectively, either into as a client payment or as a trust deposit. So, if you are holding a trust bank statement, it could be only mostly a retainer or another trust deposit, or like a payment from a client, depends. So you could bifurcate them, or you could analyze the payment type and etc. and update them accordingly in your books. So it is very important for you to observe the type of transaction and enter them into your books appropriately. Now, once that is done for trust, then when you move on to the general, you will again have client payments. Now, where do people generally make mistakes when it comes to client payment? Because it is general account. I could be really honest here, okay? Now, I have seen many of them just accepting client payments into their general account without raising an invoice. Now, that becomes a nightmare for many, because now, if you're using a legal accounting software like uLaw, we don't even allow you to accept a client payment without raising an invoice, because you first have to raise an invoice for that amount and then send it to your client, only then get the payment. So this is the process of basically collecting a client payment into your general account. Now, people think when they use general account, they don't have to follow too many rules and regulations as per law society, but that's wrong. There are different set of rules for maintaining your general account. Yes, trust, you're liable to your clients. There's a huge liability that underlies over there. But that doesn't mean you don't have a compliance issue with the general account. You still have to maintain certain protocols. You still have to follow certain systems there. So it is very important for you to again follow your bank. Make sure that each and every line item is recorded appropriately into the respective bank accounts with the respective amount, date, I'm not saying time, but amount, date to the decimal. I really mean it to the decimal. So these are some things that really helps you to reconcile your books faster, because your date is right, your amount is right, the bank account is right. If it's a trust account, you come into the software, enter it as a retainer or enter as a trust deposit. If it's a withdrawal from trust, you enter it as a refund, or you enter it as a trust transfer, or you enter it as a payout of trust. Likewise, from general account, you enter it as a client payment if it's a deposit, or you enter it as a trust transfer, which is already done as a withdrawal from trust. So these are interconnected transactions that automatically show up, benefits of using a legal accounting software again. And lastly, if you see a withdrawal from general, it could be for a disbursement purpose, it could be for paying yourself, it could be for refunding a client if they are not going to go ahead with you, or if there's any balance from their end. So all of this really matters, right? So small things, but they go a long way when you are especially trying to reconcile your books. I know if 10 minutes into webinar, I've spoken about just 10-15 minutes about the right method of adding your transaction into the books of accounts is the fundamental and foundation to reconciling your books without a major issue. I mean, I promise you, if you are able to get all your debits and credits aligned with the books, the bank and the books, of course, there will be some, what's the whole point of reconciliation otherwise, right? There will be some outstanding checks, outstanding deposits, withdrawals, payments. All of those will be handled during the process of reconciliation, but record it. Let's say you've given somebody a check, which is, a withdrawal in future. They would have deposited it. If they would have deposited it, great. It would have gotten cleared in the bank statement, and you would see the out in the books of accounts. But for some reason, you have already entered it as, today's date as an out check for the client to refund, but the client has forgotten to deposit it. It's already end of the month. It's done, but they haven't deposited. So you leave them as an outstanding. But send a follow-up email to the client, let them know, remind them, saying that, hey, you know what, this check was sent to you on this date, it has not been deposited, I'm concerned, have you received the check? Do you need us to, do you need any help from our end? Things like that. Because if the check is going to be outstanding for more than 2 or 3 months, obviously it goes stale after that 3 months, and then you will really need to write a new check and then change the accounting, change the number in the accounting platform. There's a whole bunch of, this is only a small example that I'm trying to give you, where outstanding checks play a major role. So you are seeing in this particular example that I'm showing here on my screen, where the step one is to add all the balance as per the bank statement, and then you have to reduce the outstanding checks, which means that there is balance. There is about 40,000 balance in my bank account, but I have about 39,000 as outstanding checks. So you reduce that and you add the outstanding deposit, which means that you have not deposited. Those checks are lying with you at your office, in your office cabinet, which you need to go and deposit in your bank. So add them. And then what you get as a balance is the reconciled mixed trust balance. So that, or same thing for the general too. But in here, you have a small thing called as a add or minus bank error. Now you might have, like I already said, there might be a situation where your trust account was charged with a bank fee or something. Now, what is your trust account? Basically, trust account is pooled funds of your clients' money sitting in trust. They are, either retainer or other trust deposits. If you're a real estate lawyer, you know how it works. The money comes and sits in, and then maybe it could go the next day or the day after. So until then, it's a liability to you, right? Because it's not your money, it's your client's money. That's why we always, if you see in the chart of accounts of your books, you would see the trust money that is called as trust amount clients under the liability, and it's not an asset. Whereas a trust account is an asset because it's a bank account, right? It's your account. So these are fundamentals that you would really want to understand to be able to do your reconciliation without any hiccups. Now, I feel personally, if you are foundation, which is entering the transactions, following up with the outstanding checks and outstanding deposits, ensuring the bank error is fixed in the same month, why drag it? So that is why we have a phone today. We have a phone app, mobile app. Worst case scenario, we all have a system. Log in through your system. Find out what is the end of the day balance in your bank. Okay, there is a new transaction without your knowledge. Find out what it is. It's a bank error. Fix it immediately. Why drag it till the next month, the following month? Some people I've seen have it for more than 6 months, end of the year, and then the annual report filing comes, and you have a line item over there saying, as on 31st of December, do you have any bank error? I feel one of the reasons that I really wanted to do this webinar today, honestly, is that you could pay attention to this particular point. If you have not reconciled your books, take help. Try to do your reconciliation yourself. Worst case scenario, if you are not comfortable for some reason, right? We are happy to help. We have our team and stuff, but I'm just saying, as and a bookkeeping expert, I'm sure you would be able to do if you follow these 5 steps we've discussed so far, rather, sorry, 4 steps. So step 1, for add in all your transactions and then balance as per your bank statement. Add all your outstanding deposits, reduce all your outstanding checks, and then plus or minus bank error. If you can fix your bank error in the same month, great, but for some reason not the following month at least, but do not drag it. So at least you do not see it on the December 31st, your bank account has 0 bank error. Now, that will help you to not bring any red flag from Law Society. So you're good over there. That is another point I wanted to mention when we talk about bank error. Now, this activity overall consists only of 4 steps. End of the day, you get a trust comparison report with all the trust bank balance, with all the unexpended bank balances as per client's ledger. So you have all the records. You have the trust comparison, you have this trust reconciliation statements, you have outstanding checks and deposits list, any bank errors, you have the list. So everything is technically there in one report, which is the trust reconciliation report. So we always see one page, which is the first page, see everything is reconciled and then put it in the file and move on. But I would actually say spend a couple minutes more and go over the other parts of the page or the document rather. Will have the trust listing saying these are the clients who has balance in your trust account. Then that would ring you a little bell, saying, oh, okay, so this is the client for whom you had already done the work but missed to invoice. So you could now invoice them and move the money from trust to the general. So simple, right? Now, trust listing is such a boon. You can just run over it and understand what is missing and take necessary action. So to summarize, you need to make sure you add in the transactions in a timely manner. Let's say if not daily, at least weekly, okay? And then You are able to arrive at all the outstanding deposits, checks, withdrawals, bank errors, and then you're able to reconcile your books to the T. And once you're done, you can understand how the client trust listing looks like with the client name, the file name that you're working on, and also the amount. And, in the end, that balance exactly matches with the balance in your bank statement. Okay, so client trust listing is basically what is available in your trust. Now, I'll take a quick pause here to see if there are any questions. In the meantime, that this is about the trust. Now, looking at the general account, um, before I go in there, let me see if we have any questions. Luckily, no questions. I am hoping you're all having a good time hearing me talk about this. If you have any questions, please start entering them so I could go over it towards the end of the webinar and just start discussing that. And I'm sure many of them will benefit from that as well. Now, about the general reconciliation, it's not any big different from trust. So I feel the two different things here is that there is no bank error concept, because bank error is only when you had mistakenly put in your money or you had mistakenly taken out your client's money without an explanation. Now, that has nothing to do with the general, because general account is like a regular bank account, which is more of all transactions, all nature of transactions. You have trust money coming into the general, which means transferred from trust to the general. So it is your money, your firm's money now. And then you have different types of expenses being entered in. You have, client payments coming into the general account, which means you have raised an invoice and you've got the payment from the client, which is technically again your firm's money now. So all of these is what general account constitute of. Now, that being said, what could be some common mistakes or errors that one could come across? Number one, I always feel people miss out on adding transactions because there are too many expenses. Sometimes they lose track of it. Worst case scenario, let's say you have the bank statement in hand and you're trying to match with what you've already entered into the software, but there are some missing items you're not able to recognize. You see it on your bank statement. There is a $50 withdrawal, but you don't know what is it for because the month has passed by. Sometimes 2 months have passed by because it's your general account. People are not sometimes very vigilant to reconcile it on a monthly basis, which is fair enough. But this is why I'm saying that, it is important to have both accounts reconciled to the T on a monthly basis so that you don't miss out on the transaction information or details, to be honest. So it is for your internal purpose more than external audit or external authority or a law society regulation, any of that sort. So please try and get into the habit of reconciling your general account. If you have not done, don't panic, don't worry. We always have time. Better late than never is so appropriate for this. So if you get to the point where you are able to gather information for each and every transaction as to what this was done for and where is this a disbursement, is this an office expense. That is the first kind of division that I would make. Clear division of understanding here, whether it's an office expense or a disbursement, whether this was made for, whether it's a recurring or a monthly, one time, or things like that. You can label them. So when you connect your bank, you can just simply take action and go on. You have a template. You have created account under each chart of accounts for all of them, and then you'll be able to arrive at better results, right? Now, besides that, this activity again has balance as per the bank statement. And then you have recording all the outstanding checks and deposits. You know that for a fact, all the outstanding checks and basically outstanding checks are again checks that you've issued to your client or a vendor that has not been posted yet, but you leave them outstanding. But beyond a month, please follow up with them. So, at least in the next month reconciliation, it still doesn't stand as an outstanding check. Then it kind of rings a bell to you. It should ring a bell to you. I've seen a few people where they would have transactions in their books of accounts sitting in there for years together, unreconciled, outstanding for a long time. They wouldn't even know that check would have gotten stale. They would basically, more than 3 months or 6 months. I'm not sure. I think it's 3 months now. It used to be 6 and then now it's 3, or I think so. Yeah. So key element here is to follow up on that. I think I spoke about this when we were in the trust account as well. So it's even more vigilant. You need to be even more vigilant for trust, because again, there is a category in annual report that talks about outstanding checks as on the 31st December. So you have to be very careful. So we still have a month plus remaining. So there's quite a lot of time. Go over your accounts. You're not too late. Go over your accounts. Try to clean up a bit with all of this. Now, reconciliation again is a cakewalk if you are able to pay attention to these small details, minute details, recording your balances as per the bank statements, recording outstanding checks and deposit, making sure all your outstanding deposits and receipts are cleared every now and then. Now, end of the day, of course, the reconciled balance should match with that of the bank statement. So balance, so that would, of course, reducing the outstanding withdrawals, the checks that have gone out, which have not been deposited by your vendor or your client, or you have not deposited any check that is called as outstanding deposits. You add them, because eventually tomorrow or day after, over the week, you're going to go into the bank and deposit them, and it adds up to your bank balance. So this is what is bank reconciliation basically. You're reconciling your books to match with the bank statements to ensure everything is in order. So Law Society would like to see that, they are at par with your bank, to be honest, right? Or if it is not at par, give me explanation. What is outstanding? Why is it outstanding? Why? How long has it been outstanding? Those are the types of questions that you would be facing, right? So it's not difficult to answer those questions if you have the right evidence, or if you have substantial evidence. So you will want to make sure that those things are possible only if you have it on top of your head. So which is when you do your reconciliations regularly. So which is when you add your transactions regularly. So if you work backwards, you will notice that it all boils down to a point where you are literally opening the software to enter that day-to-day transactions. I know I sound very petty, but trust me, this is where it all begins. Now, if you're very, very careful with this process, please tell me how much time would reconciliation take? We're going to go into this reconciliation screen that you're seeing in front of me. Add the date, add the balance as per the transactions. Worst case scenario, even if you have 40 transactions in a month, you're going to clear those 40 in like less than a minute or two, and then hit the reconciliation button once it pops up, which is right there above the step 3 in blue color. It will pop up. So if it doesn't pop up, it means you're missing something that is not matching. Either you've missed to add an outstanding deposit, or you've missed to add an outstanding withdrawal, or you've rather cleared an outstanding withdrawal which is actually not cleared in your bank. You are thinking, oh, I issued a check, so it should be cleared in the bank. But it is actually not cleared in your bank because the particular vendor or the client did not go into the bank and deposit it. So clearing all deposit and withdrawals one by one is a good thing. So go over line by line and do it. Now, um, many of you do it with the help of bookkeeper. Um, it's good, but end of the day, you are the one who provides them with information. So I feel as a legal professional or as a, sole practitioner, small firm lawyers, partnership firms, any of these, you have to be on top of your finances. Very, very important, your accounting and finances. Um, Basically play with the numbers. I know that's not cup of tea for everyone, including me, but it is what it is. End of the day, you have to do it. So it's better to do it when it's simpler than complicated. So I think it really helps you. Once you start reconciling it on a monthly basis, you will see the urge to do the reconciliation within the first 10 days of the month. So let's say right now we are in the November 8th. So literally, if you ask me by tomorrow or day after tomorrow, by 10th, you should be able to finish the reconciliation for the 31st of October. I know I might sound very impractical, but if you have followed everything that we had spoken in the last 40 minutes or 35 minutes, I am sure this weekend you're set with reconciliation. But what Law Society says is take 25 days in a month. It's enough. You have 25 days in a month to reconcile end of the previous month. So we have till 25th of November for you to rectify all the mistakes or to add the transactions, to make the changes, updates, go over all your outstanding deposits, withdrawals, checks, one by one, find out what has happened, dig it, and then reconcile your your October 31st. So some people would have few months together. Never mind. Go for it. Do it. Like I said, better late than never. It's good to catch your mistakes at before 25th of November than 25th of December, and it will be pending till 31st December. So you will end up showing those errors in your bank, in your annual report. So that is the key element, or rather, one of the important things I really wanted to share with you all as a, legal software accounting expert here from probably last 5 years, what I've come across with many books of accounts. I feel this is one of the common things that people end up doing before 31st December. So please, let's do it together. One of the reasons we're doing it today is ring up, let us know on support. If you're a uLaw user, if you're not, you're welcome to register, use our software, get equipped, be ready, and we are happy to help. Now, getting into how will reconciliation help you to be audit ready? Number one, your reconciliation always catches certain things that you cannot otherwise do. Whether you're able to match your bank balance with that of your accounting system, it catches all your bank transactions that you've forgotten to enter. I know it's silly, but it is what it is. We are all human beings trying to do multitasking at the same time. Numbers are not my favorite thing, so we could miss out. Reconciliation is the only way we could keep an eye on, okay, there's a transaction that you have missed. How do you update it? You catch it during reconciliation, go back into that month where if it's a payment, raise an invoice, accept the payment, or if the invoice is already in place, accept the payment into the general account. If it's a retainer, go into the respective client's account, enter it as a retainer. If it's an expense, make sure that you add it as a disbursement or an office expense. or a withdrawal could also be a client refund. So respective, there are only 5 to 6 things that you would be if you're not a real estate lawyer. If you're a real estate lawyer, there have few more additional transactions. As again, they all fall under these 5 to 6 you know chart of account types, like withdrawals, deposits, liabilities, assets. So end of the day, I'm sure you'll be able to catch all of this at the process during the process of reconciliation. Now, if you reconcile month on month, you have your books up to date, your balances are up to date, you have your reconciliation statements with you, you're ready to file your taxes anytime, including your HST, GST, PST. You have accurate balances in your books to the core. You can do your analytics, you can talk to your accountant, your tax consultant, you can do the best with your business. More than anything, you have a peace of mind. You know that you're going to be audited tomorrow. You're all good. You can just pull up the reports from this account, or if you've already pulled it up and have it in the respective files, great. But you at least have the peace of mind that you are done and dusted and up to date, and there's nothing that can stop you from passing an audit. That is called as being auditory. I know it is not as easy as it sounds, what I just said, but it is not that difficult to, guys, if you follow the few steps that we've discussed. I am happy to repeat it. I'm happy to help. I want you all to post the questions in the chat window. I feel it's only me who is talking. Unfortunately, I have you all on mute for a reason, so that we don't cross talk and people don't hear each other in the background. And for all those reasons, I would really love to turn on the mic maybe after I stop the recording. But I would love to hear from you all. How do you feel from the last 45 minutes of this webinar? I am going to jump into showing you all a few compliance documents and also how you could download them from uLaw to keep yourself audit ready, to keep yourself, have a checklist, how much time you're managing over the software. This is what I'm going to go over the next 5 minutes over here and 10 minutes on the program. But in the meantime, I would really appreciate if you start entering your questions. I am going to use the chat window to also give you all the attendance links and the topic for today's session, all of those details towards the end of the webinar. Please hang in there. Don't leave until then. And start entering questions, please. And we could discuss that too. Now, end of the day, you're done reconciling. What does it need? What are the reports that are needed to be for an audit ready? What needs to be completed, or what needs to be ready to, justify yourself with all the books of accounts? So you have 2 ledgers, 4 journals, and you have 5 other documents rather. So you have overall 11 of them, which includes trust and the general reconciliation too. Rather, it's 12 actually, including Form 9A for the ones practicing in Ontario. You have Form 9A, which means electronic fund transfer has been made for transferring money from trust to the general. And hence you need to produce a Form 9A explaining what was it for and how was it done, what is the amount, what is the reason for the transaction transferred from trust account to the general account, and all of those. So if you're a uLaw user under accounts, you will find this compliance tab with 12 documents that you could download at any time of the day. Of course, making sure you give a proper time, date range, and all the monthly statements. And once you have it, you have it completed for your trust and general reconciliation. And all the audit requirements are covered in that particular report. Now, like I said, if you're audit ready, you should be able to download this at any point in time. Just download them and you're ready to go. And this will not take you, trust me, this shouldn't take you for more than 6 to 12 minutes to download all the 12 documents. Just say 1 minute per document, 12 minutes for 12 documents. Just depends on the volume, maybe, plus or minus 6 minutes here and there. So that being said, you should be ready with a bunch of, you know, what do I say, checklist. And one of them here talks about um, invoice balance report and getting paid from, you know, trust, and how do you get paid from the general and all of those. And we also talk about handling your retainer letters, handling your trust account with required documents and procedure. So basically build, like a little trust account checklist where you're required to have a retainer letter, you have any of the receipts that you need to issue, do you have you raised an invoice, um, and you also have about raising invoices that includes handling trust accounts, money, and you have the trust ledger, you have the Form 9A. Have you raised an invoice and transferred the money, or have you just transferred the money? So all of this includes in the particular um, checklist. And how do you produce them? End of the day, what order do you produce them? Everything really matters. So maintaining these records for the purpose of clients, for internal purposes, for external purposes, like for law society, taxes filing, all of this plays a huge role in getting this up to date. So please make sure that you know this is one of it, and you are also being clear on your checklist and are able to spend your time more cautious manner, and you have a seamless accounting with all the double entry system, with all the transactions being posted into the respective journals, ledgers, subledgers, translating all each and every transaction into reports with all the accounting data showing at the back end, which matches to your bank statement, and that is what is going to help you to reconcile your books end of the day. So of course, benefits of accounting software: if you are someone who uses, great. If you're not someone who's, if you're someone who's not using an accounting software, it is simple, it is cheaper to get the software and use it than putting in your efforts and into a wrong area, or rather into the area that doesn't need that much attention in for probably maintaining the accounts, which is much easier when you have an software. And of course, it's all about being compliant and ease of use and accountability. At the same time, for your own analytical purposes, end of the day, you wake up a morning and you find out what you have in your bank left and all of those, with the purpose of analytics, with the help of analytics. And it's super simple with all of those keeping in mind. You have an accounting software. So, that being said, if you're not a uLaw user, you have a free 15-day trial. We don't anymore do a 30-day sign up. Probably it's time that I change this, which I have been behind, but I will ensure to do that. But if you go on our website, you would really see only 15-day trial. It's a free trial. You have demos. You can come on, call with us, understand how things work, and if you have a friend, refer them, and they would benefit in turn. Try to help them stay compliant with law society and all of those. Now, quickly, just to showcase of you how my uLaw program looks with the reconciliation. So I just go into accounts. This is a page where you would end up seeing all the transactions for different accounts: pool trust account, general account, your business credit card, if you have two trust accounts, any bank accounts, basically all the transactions. And once that is done and you have monthly compliances all done here, you can just simply download the transactions, either monthly, today, daily range. You can also give a date range and select it in the PDF format, in the Excel format. And you also have the reconciliations over here. You can go over the same thing that we did. You have the enter the date as per the transaction, the balance as per the bank statement, and then you clear the transactions one by one that you see on the bank statement. And once you're done with that, you would see the balances with the unexpended ledger being matched. And overall, you should be able to see all the transactions matches too. And then you should be able to also see a little bit of your field. And you can add in the bank error over there, add in all the transactions and do it. Okay, takes a bit of time because it's my EDU account, so there's several things happening at the back end at the same time. Yeah, there you go. Now, you enter the balance as per the bank statement and you clear the transactions. If there's a bank error, you will enter it here, clear the transactions, and then when you start clearing the transactions, you will see the reconciliation button popping up like this, and then you complete the reconciliation, and once you see the reconciliation is done, you would have the bank statement coming out. All that you have to do is file it and move on. Okay, again, it takes a bit of time because it has quite a few transactions, but I think that is all about reconciliation, about adding all the transactions and pulling up the reconciliation documents together by, clearing out the transactions and clicking on reconciliation. And then, of course, downloading all the other transactions. But seriously, it doesn't take that much time for reconciliation. Whatever I spoke over the last 55 minutes or 60 minutes, it's all about the process that goes behind reconciliation. So okay, so I'm gonna try and see if I can take any questions. Yes, yes. Today's CPD is being recorded and you can watch it later. Let me, stop sharing my screen. I want to take a lot of questions. I'm hoping you all have any questions. If not, I'm only taking it really positive and hoping that this webinar really reached out well. And I didn't bore you all. I didn't put anybody to sleep. I hope everyone is awake, wide awake, hearing me, because it is really important to get your accounts up and, reconciled to date. So I'm going to be here for another 5 to 10 minutes. If you all have any questions, if you don't, please let me know. I'm going to share the link for today's attendance and the topic for today's session. And also it is for 1 hour of professionalism CPD credits. Okay, it is not, we don't provide substantive, we provide only professionalism CPD credits. Okay, here is the topic details, the attendance link. Please do not leave without making a note of it. So if at all you have anything in future, we will be able to help you. There are some other important resources and links that I would like to share with you all as well. So please stay back to collect them and make the best use of it. Where can you watch this again? You can see it on our YouTube channel. I have shared a link there saying YouTube with our, YouTube link. So you could please follow us on YouTube. We have Instagram, Twitter, and all of those, but we publish many videos, webinars, and CPDs in our YouTube channel, and use the link below to, take a look at it. I'm going to paste it again separate. What is the CPD credits? 1 hour of professionalism CPD credits. How can I personalize my invoice? Personalizing invoice, which means with your logo and letterhead, I'm assuming, you can email it to us. You know what? I am going to stop the recording so you all can ask all your questions outside of the webinar topic also. But once again, I would like to thank each and every one of you taking your time today to come and join the webinar and show your support. Please come again. We have 2 more CPDs this month, which is next Friday. I think the topic is disbursements demystified. We're going to talk about how disbursements can be entered into books, the different types of disbursements we're going to talk about. It's going to be super useful for you. And the last hat-trick webinar for this month is, I think, Law Society bookkeeping compliances. So please don't miss. Come and show us your support. Pass it on to your friends. It's free. I don't know how many of you get a free webinar in a year other than with us. So please pass on the message. We want more people coming in and attending. But yes, I am going to stop the recording here so I can answer other questions besides the webinar topics today. Thank you all and have a wonderful weekend.